CNBC TV18, celebrating 15 years of leadership.
Hello and welcome to Crystalball. My guest today is Pankaj Vaish, Head of Markets, Citi, South Asia. Pankaj, welcome to the show. Thank you very much for your time.
Good to be here.
It's been an interesting January. We've had some record moves in the Indian equity markets. But when you look outside of India, the mood, whether it's amongst business leaders or market participants, is one of deep uncertainty. Several challenges, right from Greece and even if it's a low possibility, the possibility of a Greek exit, divergent central bank moves, currency volatility, continuing fall in crude prices, though that one has been very volatile, so it's tough to call. How would you assess the key global risks facing 2015 from an equity market perspective?
I think you're right. There is a lot of concern out there in the global community, and the biggest visible indicator of that is bond yields around the world. The fact that we're collapsing into negative zone, up to 7-year JGBs and up to Swiss bonds out to, I think, 10 years. Denmark saying that they're going to stop issuing bonds. I mean, there is, if I can use the term, there is a panic in the global bond market, meaning in terms of buying them before they disappear. So that is for a few reasons. One is clearly central banks doing dramatic quantitative easings, and the smaller central banks who still had hung on to their independent currencies like Switzerland and Denmark, just saying we can't really
defend them anymore.
There's a big gorilla who's about to pass by, and we are so small. How are we going to stand in the way? So that Euro-Swiss move was the most dramatic sort of visible reminder of that. And what this has done is now you have the Fed looking like maybe it's late 2015, some even saying early 2016 before they can go, because they've developed a new set of further goals that they need to look at before they can tighten, including international developments, and international developments are weak. You have obviously the ECB embarking on a big QE program. You have Bank of Japan being asked to do more than what they're doing now.
The PBOC?
The PBOC now has done this. And the important thing about PBOC is, beyond the RRR, they're also talked about widening the currency band, which in simple English means they may also let their currency weaken. You saw Singapore actually do something similar on the band. So there is a sense that every central bank is really worried about deflation. Every central bank wants to lower their interest rates as far as they possibly can. And a lot of them are looking at a mixture of also weakening their currency. That is not a healthy environment year after year. You get into it, certain portions can get into it, but if the whole world is looking in a situation like that, that's a highly unusual environment.
But I also want to sort of have you assess for us what this global macro environment therefore does for India macros. We are not divorced from what's going on. Yes, we've gotten this big gift wrap box in terms of lower crude oil prices, and that's going to make our FISC look a lot better than otherwise. But where do we stand, or how do you think India will be impacted, let's say in terms of trade? In terms of, therefore, global demand, what that means for our companies, because all of this is going to eventually then filter down into fund flows, earnings season, and RBI policy.
You're right. I mean, it is connected. I think, so even the governor in the last policy talked about that if there is a beggar die policy going on everywhere, then we have to be sure that our currency doesn't make us uncompetitive. Sure. I think just the right concern. If you look at Indian export sector, just at a macro level, even despite the dramatic weakness in the currency that took place in the fall of 2013, our exports didn't really grow in a very dramatic way. I think it was single-digit growth in exports. So, and the kind of stuff that we export, the IT majors have pretty thick profit margins owing to the intellectual property. So I don't think this is a matter of if a currency depreciates 2.5% versus 5%, that makes a 0-1 decision on the exports. So I think in the case of India, the currency leading to a much higher export is far weaker connection than it is obviously in the Eastern Asian economies.
Right.
So while we should definitely be vigilant, and we can't be the only chump out there, if everybody else is devaluing their currency, we can't be the typical prisoner dilemma saying, okay, I will bear this whole thing. So we have to be watchful, but I think we'll have to just create our own demand. I mean, that's basically has been our inherent strength. We have to have the right policies internally, right fiscal policy. We have to have the right infrastructure support. This infrastructure story I've been hearing for the entire 7 years that I've been in India.
Longer, probably.
Right, that whole $1 trillion over 10 years.
Yes, I know.
7 of those 10
Children
years
have memorized it in school, I think, Pankaj, now.
Right. We've just not made inroads into this at all. And that really needs to get going. So if the entrepreneurs are not feeling enthused enough to do that in a meaningful way, let's tackle that first rather than whether INR should be at 65 or 60. I think that's a much smaller sort of issue that...
Is that one of your key expectations for the budget? You know, I know that the government is facing this question of should we get public spending to sort of lead private spending, the return of private spending in this economy, and if that is the case, where do we find the resources for that infrastructure spend? How do we structure it? Because we've had efforts before like the IIFCL, etc., and I'm not sure they've been runaway successes, right? So if you saw this government, let's say, give up a little bit on fiscal responsibility in order to make this big public investment push in infrastructure, would you be willing to forgive them that?
As a born investor, I would. I mean, I think not all expenditure is bad. It has to be. In fact, we always seem to, and it used to be quite prominent in the prior administration. We would get to achievable fiscal deficit numbers by cutting good expenditure, sort of the good cholesterol, and that's not the right way of doing things. So I think if there was, let's say, an internal Marshall Plan to say, we are going to spend $500 billion over the next 10 years of public sector money. And these are the 20 initiatives it will be spent on. This is the kind of job growth it will lead to. I think most people actually will be excited. They'll just want to see good execution.
Markets. It will spook foreign investors saying, oh, but we thought you were going to be a fiscally responsible government. What happened to all the fiscal deficit targets?
I think if it is a well-designed, well-planned, well-managed. See, a lot of people get spooked because of leakages.
Yeah.
Right? If it is something which is not your typical bridges to nowhere, kind of the Japan criticism that used to be, but if it's well-designed and it talks about these specific 25 projects or whatever it is, and it says it's a 10-year time frame, this is how we're going to raise the bonds, this is how we're going to pay for it. I mean, I think people will say at least this is going somewhere. This is leading to jobs growth is our Achilles heel. That's where we've just simply not done anything.
So is this what you're looking forward to in this budget?
Well, I don't know if it'll be in this budget. I just think
it's the last
something
budget.
like
this is, this budget the government's had barely a month. It's really not their budget. So it'll be the Feb 2015 budget that will give you an inkling of their vision. Are you pushing this expectation to next year's budget now? Are you saying this budget too will be just about managing
I
the
just
books?
mean specifically on this topic, on a big internal Marshall Plan. I've not heard anybody...
Do you have many hopes resting on this budget?
I've not heard anybody talk about this, so that's why I don't know if any work is being done.
No. I was, in fact, in a conversation with the Chief Economic Advisor, Arvind Subramaniam. I think this was one of the things that he pointed out to me. He said, yes, we want to push infrastructure spending, but we too are working through the modalities, exactly the points that you made. Where do we get the resources from? How do we make it deliver the outcomes we wanted to deliver? Because everything else has been piecemeal and has failed in the past or not succeeded.
See, so far the push has just been, let's do public-private partnership, let's do sort of the same, and somebody comes out and issues a $100 million bond. And I think this just needs to be at 2 orders of magnitude higher. I mean, this will
it come in this budget?
This will take the Prime Minister's full initiative.
Should it come in this budget? Will it come in this budget? Will you judge this budget by the presence or lack of something like this?
I am not privy to what they're thinking for this budget. So since this is a very ambitious thing I'm talking about, so I don't know, since we've not heard anything about this, that the government is working on a very large project like this, I assume it's not coming in this budget. But even if it comes a little bit later, I mean, as long as they start thinking in this direction, right? I think this is something that sometimes you need to crank start yourself and you do that, sort of the American baseball saying, if you build it, they'll come. I think if we crank-start it ourselves, because clearly so far we've not seen that $1 trillion initiative go anywhere in any meaningful way. So let's just say we have the smartest architects, engineers, scientists, civil engineers, and we will make this, and finance people, and we will make this work. I think that will not spook the bond market, I don't think, because it will mean, at least I will not sell my bonds. It will just mean that we are starting another engine in terms of economic growth for this country, and capacity addition. And capacity addition actually is always good for bringing inflation down. So for me, that's not a bad thing if you're doing some large spending on an infrastructure project with good economic returns built into it.
CNBC TV18, celebrating 15 years of leadership.